seconds to settle down. Back there.
It is hard to look back.
Yeah, well, it's very hard to actually see out there. So, well, welcome everybody, and welcome to the crowd. So thank you for sort of staying back. I guess it's the end of day 2, and it's been an eventful 2 days. But you know, I don't think the session needs any introduction. We're all here for shaping the future of global finance. Otherwise, we wouldn't be here for the session. So I'll ask my sort of esteemed panelists to introduce themselves, and then we'll get right in. So right. Sanjay, with you.
Hi, my name is Sanjay. I am the Chief Product and Customer Officer for JP Morgan Chase. I don't think the bank needs any introduction, but I'm essentially focused primarily on payments, and just excited to be here. Thank you.
Welcome.
Hi, Sanjay. Thanks. It's great to be in Dubai, and really fantastic to see the energy that's being poured into the fintech sector. I'm Simon Just, the Group Head of Payments, and I'm also responsible for Web3 at Standard Bank. We're a Pan-African financial services organization in 20 markets, serving 18 million customers.
Are you more fintech or Web3?
I'm a fintech guy that wears a tie.
All right. Interesting.
Which means they're more Web3 or more?
I don't know. He didn't answer. He, very smartly as a banker, he skipped the question. But that's all right.
Yeah. So Christine Ciriani, I'm the International Head of InvestCloud. We're a digital wealth platform really focusing on client engagement and advisor experience and delivering advice through digital channels. Really glad to be here.
Good afternoon, everyone. John Shammas, Chief Growth Officer at DriveWealth. DriveWealth is a brokerage as a service platform that powers some of the largest trading and investing platforms in the world.
So, Sanjay, we're going to start with you. And as you said, JP Morgan needs no introduction. And I guess JP Morgan's, love affair with new technologies needs no introduction because I think I've lost count of how many fintechs you guys have invested and worked on, all right? But from your perspective, right, you work on several projects, whether they're, payments, which you could say is 10 years old, and blockchain, which is sort of now, right? Talk to us a little bit about what is the philosophy in the bank with regards to sort of bringing in fintech. What has worked? What have been the challenges?
Yeah, no, I think first of all, just to give everybody a bit of a context while everybody's familiar with JP Morgan, from a payments perspective, the business is fairly large. On a revenue basis, we do about $18 billion in payments, which, when you think about it, it's pretty massive. But, again, the bank is normally known for banking services, but payments itself alone is bringing about $18 billion in revenue. And if you translate that into transactions, on any given day, from a payments perspective, we're moving about $10 trillion per day. And if you think about commerce payments, it's about $2 to $3 trillion of commerce payments that our payments ecosystem is processing. So thinking away from bank now into payments, this kind of massive volume, essentially we are a tech platform. What we are really seeing is how do we help transform the changes that the economy is seeing, the companies are seeing, and the biggest thing that is happening, obviously, in one particular area that we see is the platform economy is really changing how not we as consumers only have seen the benefit of it, but also the small, medium businesses across the world that are really getting uplifted, and the notion of embedded payments, embedded finance capabilities is a very, very meaningful and a transformative capability for these SMEs. And this is where the fintechs have figured out from a tech perspective, how can they make it very easy for these companies to get access to financial services. And so this is where we have a very interesting setup at JP Morgan. So we're looking at, how do we either partner with these fintechs, but in many cases, it makes a lot of sense for us to offer those end-to-end services to those platforms. So it's a fine balance that we are striking, and it's not that we are opposed to the fintechs. In some cases, they have a very niche capability, very unique value proposition, and in those cases, we've decided to go invest or partner. And to your point, that investments have ranged in all kinds of industries. I personally have led investments in gaming fintech companies, in alternate payment methods or local payment methods that we will never deliver in a particular region. But there are fintechs that are working in context in the region. And so it makes a lot of sense for us to go partner and invest in those firms and offer the best experience for those merchants. So that's kind of how we are thinking about it.
Fair enough. So Simon, I'm going to bring you in. Unfortunately, us consultants can't make a day through without using the word embedded finance or banking as a service these days.
Yeah.
How real are these, so two-part question, how real are these two trends for you with Standard Bank in your part of the world? And are these genuinely emerging as platforms of collaboration between, I guess, traditional finance and fintech?
Yeah, in Africa, I definitely wouldn't haul out our core payment credentials with JP Morgan in the room from a volume point of view. But in Africa, embedded payments certainly is a core trend enabling our societies and the economies across the continent. We see it as enabling payments in the ecosystems that they now happen. So no longer in our own channels, payments moving off traditional banking channels. In fact, an IDC Financial Insights survey was saying that by 2030, they expect 75% of all payments to happen off non-traditional, off banking channels in non-traditional avenues. And so we as a bank have truly embraced this, both in our fintech investments, which are quite curated, but also in the way we enable those fintechs to navigate regulation and provide them with the APIs and the capabilities they need to facilitate payment.
And just if I may ask a question, how easy has it been?
Extremely hard. Yeah, I think you are up against significant challenge. I think there's a big debate around whether you enable the fintechs to operate independently, or whether you actually bring them closer to the bank to truly enable them to scale and provide them with unfettered access.
Christine,
Yes.
let's take a dive into, I guess, wealth, right? So if we take this whole banking as service, we take embedded finance, right? There's embedded wealth, embedded investments, right? So what are some of the interesting trends that you're seeing in the wealth space with fintech?
Yeah, so InvestCloud, we use data and technology really to make even more advisors even more intelligent, if that makes sense, to serve their clients. And we've seen that be an increasing trend. We used to serve much more the client experience directly as clients were looking for more advice and channels direct self-service. We still see self-service that clients want to have in terms of receiving information, receiving content, and receiving information. But actually what we're finding, and we kind of see this with Robo as well, advice, they still want to be able to talk to somebody, and they still want to receive the advice from a bank or a financial institution or a wealth planner. And we have clients all the way from Macquarie in Australia and Jarden in New Zealand, all the way through to Citi in the US. The word advice is quite a loaded topic. Why? Because the regulation in every country is very, very different. UK regulated advice is different than Australian regulated advice, now is even different in Malaysia. And yet the opportunity to use technology to really improve not just private banking, where we have clients like UBS, where they're using our solution to really tailor the content they are providing their private clients, but to really be able to scale that advice and democratize wealth more and provide advice and recommendations to the mass affluent is something we haven't quite seen at scale. And yet the opportunity is there.
Is there? So John, democratization, another great word. We consultants love that word too, right? So let's be honest, right? So Robinhood came around. I'll just use that example. And I think I was in the US at that time, and people said, well, investments are going to get democratized, and we can all kind of now buy an Apple share a fraction of a day. 10 years later, actually, there's greater cornering of wealth than there was, right? Did democratization actually happen? And if it didn't, what do fintechs need to do differently?
Yeah, look, it's a big question, and I think it's a evolving process, and that disparity is probably one of our biggest responsibilities across the fintech ecosystem to solve for together. I think where, you mentioned a couple of different topics that I think DriveWealth really operates at the intersection of both the embedded category, the wealth category. For us, as we look at expanding and democratizing access, we are really focused on meeting customers where they are. And if you think about the barriers and the hurdles to getting somebody to, for example, being an investor, I think the biggest hurdle is not cost, it's not product access, it's not region, it's really the fact that you kind of have to wake up one day and say, I'm going to be an investor today. And probably many of us remember when that moment happened for us, and it was probably way later in life than maybe what was optimal for us financially. And so, we've operated with this model of where are the biggest user bases in the world, whether those are at super apps, whether those are at e-commerce platforms, or whether those are at banking platforms. How do we get the best of breed financial product embedded in that technology stack? And if you can do that while you're also taking down the cost barrier, taking down the regional access barrier, that will really allow for that democratization to propagate.
So I'm not going to challenge that question. That makes perfect sense. But access without education. Why don't fintech spend a little bit more effort on education?
Yeah, that's a really good question. I think they do. I think there is a lot of education embedded somewhat silently in many of the products that we use day to day. I think that if you are a direct-to-consumer fintech, you launch it, whether it's an investing product, a banking product, and you want to educate your customer, if you call that education in your product, you're doing it wrong.
Yeah.
Right? That education needs to be somewhat intuitive in the experience that you're building for your customer. One of the things that I think has enabled so many new customers to start to learn, for example, about the stock market, is a technology that we probably all know by now, which is fractionalization. The ability to invest with a very small amount of money, especially in stocks that are priced very, very high. For a lot of customers, their first introduction to the stock market is, I'm going to put $5 into my favorite stock, and it may go down, it may go up, but either way, I am interacting with the market in a way that's teaching me with a very, very low cost of admission.
Okay.
Can I add to that as well?
Please.
Sorry. So we, in fact, we actually in our client portal offer a lot of what was actually positioned as digitalized content, right? Distributed digitalized content, which you can argue is simply just content, not necessarily yet curated, not necessarily yet contextualized. And as we get more data using AI, it's more and more contextualized. Interestingly enough, one of the large clients we have in the US got asked by the regulator to continue using our platform, not from a client experience perspective, but from a financial education perspective. Because what they were able to do was have clients watch a video, say they watched the video before they actually purchased the product as part of that journey. And what they thought was more of a client content experience ended up being a regulatory compliant process from a financial education perspective.
Thank you for that. So I'm gonna change it up a little bit. I'm gonna have two rounds now. I'm gonna have first round with the two banks, or the two bankers, right? Obviously one with a shirt, with the other one with a tie, right? Or one with a t-shirt, right? A paragraph or a sentence, the word fintech, usually regulation comes immediately in that context. Oh, fintech regulation, right? So how are you guys as banks, and both of you are very progressive, and I'm not saying that because I've been plugged to say that. I actually genuinely mean it because I know both banks. How are you guys pushing the, if I may say, the innovation envelope, but still staying within the boundaries of staying regulated? And should I just put, I guess, a caveat? Do you put aside some money for fines? Right? So what's the question?
No,
what's the answer? Sorry.
I think it's a good question, and in fact, the reason I'm wearing a T-shirt is because by my previous training, I was not a banker. I came from the tech industry. I've grown up in Silicon Valley in California, and then did a fintech, and this is the first time working at a bank. And what I really feel very strongly in this case is what the fintechs, even me when I was a fintech outside, underestimated to some degree. Our focus was so much on experience, which is important. Nothing trumps experience. When we get into an Uber or we book an Airbnb, we do that because the experience is just incredibly good, right? So experience is important, but as a fintech, I think sometimes, at least I feel that myself and others in the industry have not fully comprehended the notion of fraud, anti-money laundering. Those are real things. And so, and when you start to scale, they become extremely important.
For even the experience.
For even the experience, exactly. Because now you as a consumer can get impacted. There's so much happening from a fraud management perspective and AML perspective. So how do you bring those fintechs to really understand and appreciate how you can very responsibly and smartly apply things like transaction monitoring? Like, these are very obvious things. So the obvious things actually get you so close to what the regulation is saying. Yes, there is always still the regulator that will say, you know what, in your app, I need to know the age of the person, so ask for the date of birth. Like, why do you need a date of birth? That's very intrusive. Well, I need to know whether the person is 18 and above. Well, can we not ask the question as, are you 18 and above, versus asking for the date of birth? So there are ways to work with the regulator, ways to work with our own compliance team to bring them along on the journey, but you cannot compromise on the need for regulation or for the compliance aspect. And so we're trying to strike that right balance and also bring that to all the fintechs that we work with. We're saying, like, hey, you got to raise your your ability to monitor your transactions, ability to see, are you doing KYC, and is there a discipline, is there a culture that fosters some of those things, because that can differentiate you from the masses. So that's kind of how we're thinking about it.
So Simon, same question, a little sort of added twist to it. How receptive are the regulators in the markets that you operate to actually this two-way conversation to say that innovation is not always against regulation?
Yeah, I mean, firstly, I couldn't agree with Sanjay more. This regulation is paramount, and the pace at which these processes move can be, the cog can turn quite slowly. I think the critical thing for fintechs, firstly, is to embrace regulation, because it definitely speeds up innovation. We found in open finance, for example, the cogs have turned in Africa actually quite slowly across the continent, so not much regulation, and we've taken a more of a commercial stance to drive fintech connectors and fintech connections for commercial reasons. So we've aligned our fintechs very closely to our core businesses and our segments, and effectively they become owned by and in the business, and that allows us to drive them with real commercial intent. So we've created this curated portfolio of 37 fintechs across the continent over the last 10 years. We also have a partnership with the Founders Factory, which is a UK-based organization, and we formed Founders Factory Africa and incubated over 50 fintechs. And I'd say the primary focus is exactly this balance that Sanjay speaks of. I was listening to the founder of Revolut talking about spending 2.5 days a week on customer experiences, yet such a balance on the conversation around regulation. And we're embracing that with our fintech portfolio to ensure growth. Our key role, really creating the connectors that they require to deliver and scale their businesses, and included in that is helping them with approaches to regulators. So we find regulators to be open. We create two-way connection for the fintech. We sometimes will have our fintechs with us, obviously working in sandpits, which have been created by local regulators, but we would bring them into those conversations, I think, to promote the awareness that Sanjay was referring to, and also ensure that regulators can see the fabric and the context with which we work with these partners and players.
Okay, thank you. John, Christine, I'm going to do the same thing. One question. So again, I'll make a statement. Whether you agree or disagree, you can choose to. Tech has found its way into payments and lending a lot more easily than it has found its way into wealth and investment, right? That's my first assertion. Please feel free to disagree with me if you want to. My second question here is, with whatever tech you guys are finding in the world of wealth and investment, is it really solving problems like transitioning people from savings to investments in a safe and secure manner? Is it really serving the, if I may say, the underserved, right? And the underserved does not have to be poor, right? I just mean the underserved. Are you really greatly enabling access, not just through intuitive education, because an intuitive education assumes that I'm smart enough to be educated. I can tell you one, I'm not. So are you guys using tech in the right way, if I may say so?
I'll start maybe. So,
Okay.
so I think your comment on payments, I fully agree and why. I think actually, at the end of the day, even wealth, but banking is based on trust. And interestingly, we forget the reason why regulation is so important for banking is to make sure the trust continues. And when we look even as this, region, the more the regulation actually is helping increase that trust, because the clients will only trust the banks if there's some level of regulation to make sure that their money is safe and protected, and therefore that's the reason why regulation is so key. And in many ways, payments was a great place where individuals said, I trust the technology more even to make sure it's accurate, on time, reliable, and quick. And so that's where we saw the use case. What we're seeing the use case now in terms of democratization is the ability to make it easier for the advisor to provide the end client that education advice. What has happened, I think, in the last 5 years was a lot of spend was done to do risk analysis, VAR analysis, stress test, back test for the banker, but the ability to then send that advice to the client is exceptionally manual and exceptionally time-consuming. So one, by the time a PDF proposal was sent to a client and the client opened that email, the proposal might be completely out of date because the market has shifted already. But there was a lot of time and effort and money spent in making sure that proposal was suitable, eligible, fit for the profile risk, and compliant with regulation, had all the kits for PRIPS, and had all the documentation. So I think that ability now to use technology to really make that final mile so that 90% of the effort isn't creating the advice, 90% of the time is actually advising the client, and 10% of the time is using the data to provide the compliant advice is what we can do now with technology and with our fintech platforms.
I certainly agree with Christine and your assertion, Arjun. I think that the pace of change in investing has definitely been slower than the payments and banking sectors. I think there's probably a few different reasons, one being a possibly more fragmented regulatory market, especially as we focus a lot on bringing international access into very liquid assets like that would trade in the US. And there's a lot of emerging markets we work in where there is no paradigm for that type of product, right, for an international offshore investing product. So that takes time to develop in many regions. I also think that in a lot of cases, direct-to-consumer companies see banking and payments and even lending as prerequisites before investing. I think for certain customers that may be true. But funny enough, I often say at conferences like these, we see probably 80+% of the content around banking and payments, right? Yet I'm sure every single one of us actively engage with investing products in some way, right? We all have retirement accounts or wealth that we're saving and putting away. And I do think that needs to be a much broader part of the conversation. With regards to your second question, I think if we were sitting up here 5 years ago, we'd probably be having a conversation about unbundling or rebundling or re-unbundling. Remember when that was the topic of the day? And I think what's starting to happen now is, there's this gradient of monoline products over here, very large ecosystems on the right side. And as you move further right in that gradient, I think those ecosystems are starting to figure out ways to really, intersperse investing, banking, lending into something that feels very cohesive and much less siloed than they were before. I think a perfect, simple example of that is I go swipe my card, instead of getting points, get stock roundups, right? Which is a product that I think we're starting to see quite commonly. There's a lot of cases like that where I think the technology is finally here to really intersperse those ecosystems.
Thanks, Vlad. Rebundling and bundling is passé. We now call it atomization. Okay, get on with the act, right? Give me a call if it isn't the case. Let me two-part question, all of you. So please do give the other person a chance to give an answer. So I'll try and restrict you guys to keep to about a minute and a half, right? So first part of the question, right? There's no doubt technology is now essential. It's sort of ingrained in everything we do in the financial services sector. But transformation through purely just introducing technology could be done in multiple ways. So my assertion here is I think traditional financial services should do more with fintechs, right? Not just technology providers, i.e. a software development house and so on and so forth. I'm not saying you shouldn't work with them. I'm saying you should work with fintechs, right? But I've actually seen, at least in my experience, that partnership is still not a partnership. There's still a little bit of the master-servant sort of relationship. It's you still have to go through the procurement hoops. There's no real co-creation that really happens, right? So two-part question. One is there a risk for banks to carry on with that attitude towards fintechs, right? And should they be truly embracing this partnership? I still agree that, there's a bigger brother or a bigger sister and a smaller sister, a smaller brother, whatever gender we're going down these days, right? And the second part is, what do the fintechs need to do differently? Kind of make, I guess, the banks behave differently. Yeah. Sanjay, I'll start with you, and again, the same question for all of you.
It's a great question, actually. I think you're right. Historically, when we look at larger entities like a bank, working with, even with software companies, we bring them in, we take them through this procurement cycle. There is RFPs and reviews, and then you eventually, land on something, and then it's more or less like a handover project, right? There's no I give you something, and then a few months later,
it's
I get
taken a
back.
year by then.
Yeah, exactly, and the year ticks by. In terms of when you talk about financial services and delivering a payments capability or any kind of a financial functionality to the end user, it's not just about software at that point, right? It's about how do you deliver that in a manner that is consumable, with the trust, with the resiliency, with the compliance aspects all baked in. And so in that model, to your point, absolutely this partnership with fintechs in the realm of similarity with as any other service provider is a model that doesn't really work. So when I joined a few years back, JP Morgan, to some degree, we were also falling in that trap a bit. When we were looking at partners, we were seeing them as partners where we would tell a corporate like, hey, in case you want this particular functionality, we have a well-established partnership with this particular fintech. Essentially, it was a referral. I mean, the company could have gone directly to that fintech, and they do, but the integrated capability isn't available. So again, to keep it short, I think the way we are changing that paradigm going forward is this notion of embedded is actually quite expansive. So embedded means that I will open up my APIs, and I will ask the fintech to integrate into my APIs and deliver an integrated capability. The win-win or the capability, the stakes are equal on both sides then, right? So that's how I see that model to be more successful, where the fintechs and the banks are willing to co-collaborate in a true product and tech manner versus just a contract.
Simon?
My mind goes back to 2007, building a joint venture with a global consumer brand around a co-brand card program that was actually pretty successful in our home market. And the integration with the bank was like a journey down a razor blade, really, really hard to do. And I think one learns over time that the critical thing for banks is to focus on the number of partnerships, ensure the correct business ownership, the segment or the business unit that's driving it has a vested interest in delivering that solution to its customers, and then making sure that you have an enablement framework, an operating framework that really allows you to support them. So product owners at the right level, who are their champions in the business, actually driving their cause from a risk, compliance, legal, procurement point of view. on a daily basis, absolutely critical. So that's very much the approach we've taken. We've nested our fintechs with core BUs and we provide them support. The second part of your question around that thing that I think fintechs could embrace or do better, it's got to be around embracing regulation again. I think proactively knowing and being very intentional about the problems you're trying to solve, and having solutions for them, engaging upfront, engaging with the regulator, with the banking partner, and ensuring that you're solving for it rather than running away from it with your customer experience you're trying to deliver. There are ways to engage regulators in risk-based regulatory approaches that can deliver great outcomes for your end customer.
Christine?
Yeah, so on that, I think regulation is absolutely key to embed in your technology from day one. If you add it afterwards, it's actually an afterthought and it's not embedded in your architecture. One of the best moments of my day is being able to sit with our executives of our clients and to talk about what they want to see on the roadmap, to talk about advisory committees and who they want to learn from and who they see as individuals that they can share best practices. In Japan, we heard in the previous, session, they're moving into goal-based investing, moving into fee-based advice, how to learn from the US market, who went through that transformation before. But I would say fundamentally, when you say, how do you achieve it? I actually think that individuals need to be ready to fire their clients. And I mean that from a wealth perspective as well as from a fintech perspective, of individuals who don't want to partner. And I think that we have been in situations where there is a master and slave sort of a relationship, and if that becomes quite toxic, that's a relationship you just get out of. And I think that, in many ways, a fintech partner should feel empowered to be able to fire their clients if they're not able to have a collaborative partnership. And I would say the same thing for wealth managers with...
Fair enough. John, before I come to you, I've got a question, Christine, and John, please pick that up in your answer. You mentioned embed regulation in your product early enough. To me, that's impossible. You're innovating. The regulator does not even know what they're going to regulate. So there's so much regulatory ambiguity on items. So how do you expect me as I'm not a fintech founder, but let me just act as one. How do you expect me to embed something which still isn't there or it's unclear?
But I think this goes back to best practices globally, right? So we see regulation in different trends, and we see variations of regulation as well. At the end of the day, to give advice, you want to make sure you're having some traceability to be able to show how you're giving that advice, and that advice is consistent. We hear talent being an issue. If you can give a tool where that advice is consistent across 1,000 advisors, because you're using technology to enable them, you're embedding that regulation and that traceability in your platform, even if the regulators haven't asked for it yet.
Okay.
I think it also goes down to understanding the fundamental objective the regulator is trying to achieve to protect the consumer. I think understanding that still allows you to innovate.
Fair enough. John?
I think with regards to your question around banks and fintechs or incumbents and fintechs working together, I think that's actually starting to change. And I think there's a cohort of incumbents that are starting to recognize if they want to avoid being disrupted by the challengers, the easiest way to do that is be on the technology that the disruptors are using. And to me, the beauty of the B2B software as a service space is that there are a handful of companies like DriveWealth or like InvestCloud where we can overnight change the level of expectations of a class of products, right? We can develop something today that tomorrow 50 million customers may have access to. And if you're an incumbent that continues to insist on insourcing everything, right, and really vertically integrating throughout your product set, it may be 20 years before you have that feature that now those 50 million customers have access to.
Yeah. No, you're true. I think the thesis is emerging, and I think it's there. This, classical, if I might use the word classical digital transformation, I think that's an oxymoron of the sentence. But I think that sort of thesis is failing. We can see it because its time to market is long. It's expensive. You don't have the capability. You're expected to know everything, which itself is sort of, if I may say, perverse in its sense. So, guys, we have 5 minutes. I want to leave a couple of minutes for questions at the end. Rapid fire, 30 seconds. I'm going to start with you, John. We're not going to leave you last this time around. What is the one disruptive tech trend in fintech that you believe is going to be defining for the next decade? You cannot use AI.
Fair enough. I think one of the most interesting is actually 24-hour access. This is something we're starting to see in the stock market now, sort of removing those barriers of you can only trade in this time period and for the rest of the time period, good luck. But I also think that applies to things like advice. There shouldn't be only a specific time period where I can call my investment advisor and get an answer to a question about my portfolio.
Christine?
I'm going to say the TikToking of advice, right? The ability to consume information like TikTok, where I can see and anybody can access wealth, and it's not just from the famous players, but on the non-famous players, and consuming the education in short bits of information.
We are seeing the emergence of social wealth in any case, right? I think there are some platforms which are doing they might not have TikTok
might get
yet,
banking.
but you've got a differentiated view. I like that. Simon?
For me, tokenize probably never one thing with me, but the tokenization of real world assets at the intersection with embedded finance. So really how you open up your services around custody, et cetera, as a financial services organization to enable flows and securing of digital assets.
You definitely have my vote for it. I'm not suggesting you guys don't have my vote for your ideas too, but that's kind of where I sit. But Sanjay, last but not the least.
Too many things to name, but rather than naming a technology, what I feel so far, we have seen an amazing evolution of fintech that has really benefited us as consumers. I see the next wave, and I implore a lot of the people who are looking to do work in in fintech space. B2B is still very highly underserved, and the companies that are really focused on B2B are going to see some massive scale. So,
Agreed. So we have about 3 minutes. I'm happy to host 3 questions, but I cannot see. So if you guys are raising your hand, okay, I got 2 here, but I think that gentleman or lady went first. I'm sorry, I can't see. So can someone get a mic there, please?
Thank you. A question for Christine and John. Tell us how you managed to get your first contract with a major financial institution. What were the things that you were capable of putting on the table so as this large institution decided to entrust you with the development of their wealth software?
If I knew it was Mehdi, I wouldn't have actually given him the mic, but I couldn't see him. But in any case, go ahead.
I think for DriveWealth, we've been in business for about 12, 13 years now. And at the start of the business, when we launched our B2B platform, the sort of natural fit that we went after were other very, very tech-forward, bleeding-edge, disrupting companies. And I think that worked out really well for us because those were the companies that were most apt to go with a new challenger like us, right? And I think that's what sort of gave us stepping stones to larger and larger anchor digital tenants. And it was sort of after we got a few of those where we could turn around to a big bank and say, hey, we support maybe not somebody who looks exactly like you, but certainly scale that looks like you. But it is a different requirement set. It's everything from a different set of functionality, regulatory embedded, as you mentioned, as well as soft requirements like SOC compliance, which we never thought about when we started the business going after the tech-forward companies.
Christine, you want to add something to it?
As there are books on this, right? I think that it is about making sure you find the person who's a catalyst and wants to be a pioneer with you. Going back to choosing the partners properly, we call them beachheads. Every beachhead we had in a new market was a pioneer in its own right. It was a bank or a financial institution who wanted to pioneer in open banking, wanted to pioneer in goal-based investing, wanted to pioneer in being the first SaaS client experience in that market, and that was enabled us to then have our first.
It's very, very hard to find that pioneer.
It is, but
There are some of them out there.
possible.
Another question. There was somebody here who wanted to ask a question, please. Well, there's quite a few, but could we quickly?
Quickly, yes. The story is about the regulation. I absolutely agree with Arjun. So the question is, if the regulation do not allow you to move on a second stage, so the compliance officers will tell you that you do not disclose like this and that. Yes. What you do next? You sell that? Okay, goodbye, or you still will fight for the opportunity if the technology is good, if all other things are fit, and so on and so forth. But you have very small question, but it's not allowed. Like 100 of years in your bank or financial institution. So what do you do as a catalyst sitting here, or you will just step away?
No, I think it's a good question, and we do find ourselves in those situations, not just with the external regulator. Our own internal compliance teams raise some really difficult roadblocks, so to say. But the focus has to be on the value that you are trying to create. Everything has to be grounded in that value creation. And if you're grounded in that value creation, you can bring that compliance officer or that regulator along on that journey. There are many solutions to a problem that they may pose to you. Avoiding them is not the answer, but finding alternate means to satisfy them, as long as it is grounded in value that nobody can deny. If a value is strongly communicated, then at the end of the day, you're going to win.
Guys, we're out of time. I think you can catch the panelists one-on-one as they walk out. Don't smuggle them. But join me in sort of giving them all a clap. Thank you.